Time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Joel Hawthorne, head trader, CEO of themorningsnapshot.com. Great to see you both. Joel Hawthorne, you see some selling happening here today after that ADP jobs print. Your thoughts on what's going on with the markets?
Good morning, Nicole. Always a pleasure. Always a pleasure to see you, Ben, as well. I think that today is one of those days where there's just some liquidation. We know that we've had just an aggressive rally here that was really, we talked about it, that seems like there was nothing to stop all of the momentum to the upside. And I think today is just one of those just kind of a breather, right? There may be some profit taking. There may be some cautionary tales, especially after the FOMC minutes. I mean, on such a short week that we've had this week due to Independence Day, there's just a lot of economic data, right? We have FOMC minutes, we have JOLTS, ADP, and then even tomorrow with non-farm payroll. So there's just a lot going on here. And I think the market, anytime there's cause for concern, people run for cover. And I think that's what we're kind of seeing here in this so far for the first couple hours of the trading day.
Yeah, and look, it was a shortened trading week. You had a half day on Monday, and so, that's always sometimes factors in as well. Tell me about not Datadog, AI, C3 AI. I'm looking at all of them at the same time, and I just can't get over how much they've gained, okay? So C3 AI year-to-date's up 240%. It's run up with all the AI names. What are you thinking here?
You know exactly what you said. I mean, we're looking at a 52-week low of about $10.16, a 52-week high of about 48, almost 49, currently trading 38. And I think there was a moment when, AI, just putting AI in anything AI was just cause for buy, close your eyes and hit buy, right? Hit green. And I think that's what we saw here for a few days, even probably for a couple weeks. And I think volatility in those names like an AI has remained. But I think some of it's lost some of its zeal, some of its appeal for the short term. Who knows what the headlines will be next week or even going in the near future. Because of that, I'm a bit bearish. I want to be a little cautionary, though, because I do think that, with so much volatility, there can be some swings for a stock that's trading right around 38 bucks. I think you have to be a little bit cautious because it can move.
Right, understood. So a little bearish here, and caution is the word. Ben, your thoughts on this chart?
Nicole, Joel mentioned the range we've been in over the last 52 weeks. I think he said 10 up to 48, almost 49. I took a look at that range, and I was really focused first and foremost at the sideways consolidation area we've seen since the run-up that we saw in the beginning of May. Now, that run-up invalidated a longer-term trend to the downside, but let's just begin with first and foremost, again, the range-bound price activity we've seen, which establishes a pretty well-defined upper and a lower extreme for us at this point. You can see on the 30-minute candles, but we don't get a lot of conviction one way or the other. Joel, I went ahead and just advance that 48, 49 level up to 50, down to 30, and here you can see, again, a very nice round pivot, 40. We're just below that right now. Again, though, I do want to point to the fact that as we take a step back from the 30-minute candles and look here in this instance at the hourlies, the chop trade that we've seen recently comes after a big advance, right? Here we are from 18 all the way up again to this 48, 49, $50 level, areas of value forming at higher and higher levels, and sideways consolidation around this $40 level. So I do want to remind everybody that, well, this did invalidate a very long-term trend to the downside. Here you can see it, right? Top left corner of the chart down to, well, Joel's talking about that $10 level. You can see some advances we've made here, and just kind of zooming back in on that rally off the lows that we saw back in December of last year, January of this year, and then ultimately the rally we just looked at from May up. You can see that we're now above the 50, still holding above the 200-day moving average. RSI, though, starting to roll over here a little bit. So again, to me, it looks like we're still sort of in this wider consolidation area, but definitely some strength here off the May lows.
Right. Okay. Thank you for that, Ben. Look, he's making the point. You're watching a lot of the same stuff, Joel.
Absolutely. 100%. That's exactly why, even in a name like AI, that I want to be cautionary bearish. Looking to sell that 43.50 call expiring next Friday, simultaneously buying a 44 call that expires the same day. credit of about 8 cents, break evens 43.58. Because yeah, there is some a bit of concern there near that 44 level, right around there, and going to use that as resistance. If we do get a break to the upside, perhaps maybe we stop there, consolidate, and that will be something that I think will benefit this bearish vertical call spread.
Yeah, look, it's a high stakes test here at this point because these AI names have run up, and C3 AI is still one of the most heavily searched tickers, along with a lot of the other AI related names. At this point now, let's turn our attention over to Datadog, which the last few months have been extraordinary. I looked and I saw the last 6 months up over 30%. And when we look at these charts, you guys tell me, Joel, your thoughts on Datadog?
Yeah, I mean, we see that they're, going back near that April-ish area. There's massive run up to about 90. And then even once it hit 90, kind of chopped around and then exploded up to like near that 104 and change level. And since then, we've kind of been stuck really in a bit of a range and consolidation between, looking at the chart, probably roughly about 91-ish to right around about 100 or so, maybe a little bit higher. And because of that, I want to say that right now, I'm more thinking that we chop around in this range. We would have to either break to the upside above 105s or even break to the downside below 90 before I think new trend is confirmed. And because of that, I'm neutral as far as direction goes.
All right. And tell me your thoughts, Ben, as you take a look at this chart.
Joel and I have a similar read on this one. Again, Nicole, it looks like I noticed first and foremost Joel described it as explosion to the upside. We saw that in the beginning of May, right? And then a little bit more sideways consolidation since. But let's just begin first and foremost with the move that we saw, or sideways consolidation we saw throughout the month of March and April. And then again, here is that big move to the upside. You can see the conviction. You can see the breakout tendency and how we transition from that horizontal into the vertical phase, higher highs and higher lows, the market seeking value to the upside. And what happens after topping out around that 104 area? Joel mentioned we found that balancing 90 to that 104 area-ish. And so right now, I just went ahead and identified these areas of consolidation so we can see them on the hourly candle chart pretty well defined. We're balancing around 96. Now, this move up actually, again, much like AI, invalidated a longer-term trend to the downside. Let's take a look at that longer-term trend to the downside, and here you can see the invalidation of, because we had areas of value that were forming in lower and lower levels, 148, 97, and as we're forming 75, the working assumption is that we're going to see a new area of value form at a lower level, right? If we're truly trending to the downside, but instead, look what happened. We worked our way right up into this 97 level, a key area, up and through it to 100. I think that designates invalidation thereof in terms of that key area. So it could chop here sideways. It's not necessarily a buy signal at this point, but you just lose the momentum to the downside and the working assumption that value is forming at lower and lower levels. Lastly, taking a look at where we are relative to the 50, the 200-day moving average, because we're actually still holding above that. But look at RSI. Lackluster enthusiasm in terms of this run up here. I mean, if anything, you got a divergence here. RSI to the downside, price to the upside. Again, still in a bit of a range here, though, invalidating that longer term trend, holding above the 50 and holding above the 200 here.
So invalidating some of those key levels, Joel, like Ben's showing us there. Your final thoughts here?
Absolutely. I agree with Ben on this one as well. Loving the charts. Selling that 104 call, simultaneously buying the 105 call. And then I'm also going to sell the 86 put and buy the 86 put. This is an iron condor. It expires July 14th as well, next Friday. Picking up 18 cents. Break evens are 86.82. Again, this trade is wrong in the event that we do break 90 to the downside, we trade below 90, or we break that 104, 105 area to the upside. So my theory is that we chop in this range that we've identified as they're building value right here. And there's an auction. And anytime there's an auction, buyers or sellers are looking to gain control of trend. And I think that's what Datadog is going through at the moment on the charts.
Yeah. All right. And last but not least, I know you have a bearish vertical here. When you're looking at AMD, which is trading at around 111, has had a run up this year of more than 70%. Your thoughts on that?
Absolutely. I think AMD, I mean, we saw, I think if we go back to AMD one of their recent bigger moves took place when NVIDIA just crushed earnings. And we saw a major move in AMD, a major move, obviously, as I mentioned, in NVIDIA. But since then, what we've seen is possibly profit taking, possibly people kind of maybe allocating funds elsewhere. And AMD has not performed that great since then. And I know they mentioned their AI narrative as well. Because that is sitting right around 111, I do think that there may be some more weakness to the downside. But in the event that there is not, I think some of the previous swing highs will act as short-term resistance.
Okay. Ben, your thoughts on this one as you take a look at that chart, final chart.
Joel, we're 3 for 3 today. Joel just mentioned 111. I've got my eye on 112. I think that's the key area, but I wanted to begin first and foremost just the trend lower we've been seeing over the last few weeks. You can see we topped out around 133. Joel mentioned after the NVIDIA buzz. Things have not really gone very well for the longs in AMD. You can see the areas of consolidation, 3 of them that have formed at lower and lower levels, currently balancing around this 112, 111 area. I don't want to split hairs necessarily, but again, value moving lower after a failed auction up to that 133.74 level. Look at that failed auction. Took out the highs that we saw back in the end of May. So beginning of June, we were able to take out that key level here, but unable to see follow through. Look what's happened. Reversed since and right back to a key area around 160. This is potentially reversing a longer term trend that we've been seeing to the upside here. So again, that bearish narrative, should we open up the door to the downside, really take out 106 with conviction here right now, targeting 96, 95-ish, and again, potentially building momentum lower. Also, if we were to take out this 50-day moving average here, I think we could add to some of that momentum lower. Ultimately, you've got the 200-day moving average well below, down around 83, which could become a target if we really start to see some energy lower here. But yeah, definitely looking at a stock that's really failed to ignite enthusiasm. And ultimately, I always feel like if it can't go higher, it likes to test lower.
Right. All right. Thank you for that, Ben. We appreciate it. And Joel, while Ben has been on the same page watching those things that you're watching, you often pick winners, names that you think are going higher. Today, you just seem a little more cautious overall. Right?
Yeah, you're absolutely right, Nicole. You're reading me like a book, if you would. I think that right now there's a bit of caution. VIX is up, trading near 17. We've seen here going into this kind of shortened week, there was a lot of consolidation at higher prices in SPX, where maybe the market is just really taking a pause, if you would. And if that happens, I think there will be even more caution, more protection to come. And so that's kind of where I'm looking to just kind of be protecting, stick my toe in the water on some shorts and see if I can pick up some premium here and protect myself simultaneously.
Yeah, understood. I mean, I think you make a good point about the VIX, too, because we've been watching 13, 14, and look at popped higher today. Joel Hawthorne, thank you. TheMorningSnapshot.com and our own Ben Lichtenstein on the charts for the big 3 today. Thank you both. A few great names, AI, Datadog, and AMD.